All right, as people slowly get rolling into our first webinar of 2024, I'm going to cover some housekeeping before I introduce you, David. Thank you for joining us at How with Amplify. We're really excited about 2024, and we've got lots to let you know about before we discuss indirect tax with David today. So, couple things on the roster for you guys to pay attention to. In February, we're going to have an opportunity to have systems and automation as the topic. So the third Tuesday of February is systems and automation, and we have a chance to have an alumni partner that Jesse and I used to work with from Red Pill join us for that. The exciting thing about systems and automation, and this is not hit the press yet, so members are the first to hear about it. Amplify has decided to dig deeper into emerging ERPs. As all of you know, we are a NetSuite solutions provider, and we implement and consult and license with NetSuite. But in addition to that, we have become an Acumatica partner. And so we would suggest that the two best emerging ERPs that are out there, and the two ERPs that every single small, medium, and growing business should be at least looking at in the system selections are now implemented, consulted, and licensed by Amplify. So this is really, really exciting. We're really excited that our Amplify tech team is able to provide Acumatica. The reason that we decided to add a second ERP to our roster is that Acumatica is awesome for construction companies and NetSuite is not. And so we were missing opportunities because there's a lot of construction companies or energy services companies or other engineering, et cetera, type of companies that look and feel like construction, which we weren't able to serve well. So we're really, really happy to have this extra alternative available. And Acumatica is a great option for many industries, not just construction, but that was kind of the driver to train our people and to sign up with the second emerging ERP. So this is really exciting, and we'll talk a bit about that, but Red Pill is obviously ERP agnostic, and that's who will be our expert in February. So please make sure to register and join us and learn more. I'd also like to let you know that for our Q1 campaign, we are doing a free implementation. And so this is a massive campaign. If you're interested in applying for a free implementation, that's obviously of great value. Please make sure to contact Josh Ponton, and I'll get Nikki to put Josh's calendar in the chat, and a free implementation will be awarded at the end of Q1. We're really, really excited to introduce the Amplify Tech Services with a Q1 booming campaign like this. March, we're going to do ethics and governance. So a lot of you members need your ethics hours, but let's not be mistaken. Every business leader needs a refresher on ethics. So in March, we have an opportunity to talk about governance and ethics, and we have Gerard joining us for that. He was a speaker last year and really resonated with a lot of you. And so I know members will be excited to see Gerard come back, and also to have an ethics learning opportunity in March. So be sure to join us for the third Tuesday in March for our webinar series. In April, we're going to talk about talent and recruiting. For those CPAs on the call, you might have had a chance to read our article in the Dividends magazine on talent. That's at the anchor of what we're talking about in April. So please do read that article and join us in April to talk about talent and recruiting. We're really excited. It's obviously a hot topic for every business leader, so we'll be addressing it in April. Also in April, we will be having a live AHA session. We've got some great people joining us, and they come from Avante. They're going to talk about their entrepreneurial story. They're going to talk about search funds. So if those of you who aren't familiar with the concept of search funds, that'll be an exciting new investment idea that you may or may not be familiar with. It's kind of new to Canada, and it's really neat. And that's how they launched with Avante that they purchased. And they'll also talk about automation, their software. We'll talk about our software. We'll talk about other software and how that can have a direct impact on scaling business and saving costs. So lots to talk about with these two experts, and I am confident we will sell out the April live event. That has not started registration, but when it is open, members will get the first opportunity to sign up, and I'm pretty sure we'll fill up just from members alone. So please do not hesitate to sign up when you see the live invite. That's a lot of admin, and I've already taken up 5 precious moments of David's time. So without further ado, I'm going to pass it to David, and I'll get you to introduce yourself, David, and your topic, and let's get started.
Great. Thanks, Jamie. Thanks for having me, and thanks for everybody who's listening in today. I'm David Crawford. Actually used to work with Jamie in a couple different capacities in our prior lives, and now I'm working as an independent contractor, doing what I've done all my career since leaving the dark side at CRA in 2000, I guess, and been in public practice ever since. So today we're going to talk about navigating indirect tax audits, which is primarily GST, HST audits, but we're also going to talk about provincial sales tax as well. And as you may or may not know, indirect tax kind of covers everything else that's not income tax that falls into, other ST sales taxes, carbon taxes, fuel taxes, and the like. So I just want to pop up the obligatory screen. And today we're going to talk about the audit landscape and what we're seeing in our client base and what's been going on post-pandemic, and with CRA and other government departments across the different provinces returning to work either in a hybrid format or fully back to work in the office and doing field audits, etc. So then we'll talk about different types of GST audits and focus areas, and then looking at best practices for managing auditors, the audit process, and as well as collectors as well, so collections officials with Canada Revenue Agency. So, and then basically repeat the same thing for PST audits, mostly focusing on British Columbia because that seems to be where Alberta companies attract the most attention, and then Saskatchewan as well, and then Manitoba not so much. And then lastly, we'll just talk about audit insurance and what that means for your clients and how they might be able to avail themselves of protecting professional fees against audits. So what's been going on lately? Obviously, before that, during the pandemic, we had massive government spending at all levels, requiring increase in taxes, but also fighting taxes that have been, I guess, if you will, mishandled during the pandemic. And we've seen a lot of that, mostly on the indirect tax side, but payroll as well, where there's significant payroll penalties have been applied to various clients, and having to basically apply for relief of those penalties, whether the CRA is going to grant those or not is another thing. And if you've been paying attention the last couple of years, there's been all kinds of tax changes with respect to new taxes such as underused housing tax, and then various other ones at the provincial level as well. As said before, the staff's been returned to office for some time in a hybrid format, going back to the office 2 or 3 days a week, sometimes even more. In provincial governments, they've been back in the office and doing audits for some time, and we're now seeing in-person audits start up. I guess CRA people crave in-person activity too. So we've seen several field audits take place, as well as the little short desk audits that pop up for 1 or 2 periods. Those are kind of getting back into sort of a regular cadence that we saw before the pandemic. So, and I think what we're seeing is I would call it a grace period that was kind of going on from pretty much March 2020 to probably about late 2022, and then last year I think kind of the gloves came off. And they're starting audits and doing assessments. Last fall, or I guess this past year, CRA has been announcing various revenue generating projects. About a year ago, they did one regarding small builders and house flippers, and did a national project that presumably created a lot of revenue for them. So we think that that's probably going to continue, and maybe looking at construction sector. So last year, in addition to adding the underused housing tax for 2022 and forward, trying to fix this housing crisis and throwing kind of whatever they possibly can at it. Sort of the latest thing, an article I wrote about a couple of weeks ago, was that short-term rental properties that are being turned from kind of Airbnb over to, say, long-term rentals, and that's seems to be a phenomenon in BC and other parts of the country where there's a lot of short-term rental properties is another issue, and that's going to affect a lot of individuals who hold these as investments. So yeah, I think the government sees CRA as a bit of one of its tools in its toolbox to ensure the industry's paying its fair share of tax and not contributing to the housing crisis. So that pilot project, again, I think, it was late 2022, early 2023, so it's over a year old, was quite successful for smaller builders and flippers. And that covered both income tax and GST. Obviously, whether they were trying to treat it as their principal residence, they move into it, put some lipstick on the home, and then sell it again, whether that's income or capital gains, and whether they should have been registered for GST or not. So some of the issues we've been seeing for quite some time now is just it's more of a demographic change, I think, and that is there's more purpose-built rentals going on. So builders are either having to become landlords because they've got unsaleable inventory, or just the market demand is saying rentals are going to be more prolific than new sale inventory, whether it's a home, house, or a condo, or townhouse, etc. So when a builder becomes a landlord, there's a GST event that basically hits them when somebody moves into the property, whether that's inventory or not, and they become landlords. There's GST comes due on the fair market value at the time that person moves in, and that's because the builders would have got GST refunds throughout the course of building that whether it's multi-purpose, multifamily project or not. And so what we're finding is when clients do these on their own, and CRA knows this, and generally if you've overpaid the GST self-assessment on the fair market value, you've kind of thrown money away, and they know about 90% of builders overpay that tax. What they routinely do is if say it's a multifamily project, most of them are usually over 20-30 million. Pretty much anything that's over 10 million, they're going to look at it and see that evaluate whether that's reasonable or not, or it should be higher. Obviously, they're looking to say that it's higher. Typically, that kicks off with a desk audit, and they're going to check for input tax credits that might have been claimed on the rental property after the first tenants moved in. And then the CRA real estate appraisal group will look to see whether that fair market value was too low. And normally they come back and pretty much always come back with a higher number. So and then input tax credits, they're looking for the typical compliance issues, making sure that the invoice is made out to the right person, right name, all that stuff, and make sure there's GST numbers of the vendors on there. They look at holdbacks, progress payments, and deposits. Those tend to be just a timing issue, but sometimes GST doesn't get addressed properly on progress payments and holdbacks. We see that quite a bit with kind of small and medium-sized builders, and especially with the timing and release of holdbacks. And then from an input tax credit perspective, they're looking to see, as I said before, that the builder's not claiming input tax credits for GST incurred after it becomes a long-term rental. So this is just a snippet out of, you may or may not be able to see it, CRA CPA roundtable. Every year CPA and CRA get together, has been virtually and in the past couple of years, but before that it was all in person, where practitioners in the CPA Alberta would put forth questions for CRA headquarter rulings to answer, and then share those with the membership. And it was interesting that this was put at the very first page based on a question that a member had posed. And again, this goes back to the project I was looking at, but this action plan is that they're going to be looking at all real estate activities, not just the flipping and unreported real estate transactions. So we expect to see more of this probably in the next several years. Again, use the government using CRA as a tool, no pun intended, to I guess police that industry for I guess what they can perceive to be over or underreported taxes, etc. So this just goes to show that they feel that this is an important area. So Jamie, any questions from the first few slides?
Yes, thank you. So you mentioned that that there's been more payroll penalties and that people are submitting to get those waived. Curious as to like, do they, I mean, I don't know how CRA works. Do they just have an initiative to look for opportunities to give those penalties? Or what is actually, or are people actually making more mistakes? Like what's the increase actually stemming from?
The one that I did for a client was early days of COVID, and bookkeeper just happened to be, expecting her first child in, I don't know, within a few months uh, of COVID being announced and lockdowns and all that stuff. And she sort of kind of just stressed right out, lost her mind, could not focus on stuff. We had a lot of not coming into work, being sick, whatever. She actually ended up quitting and was supposed to be the one that was remitting the payroll taxes, and she wasn't doing it on time. So there's an automatic 10% penalty on the value of your late payroll remittance, right? And so that's exactly what it was. It was actually a COVID event, which is arguably one of the, and there was a lot of disruption to CRA services at that time. Not that she couldn't have made, or somebody couldn't have made the electronic payment. Um, and so it was, I think there were several penalties, and they're automatic, so it's not like CRA is going out and looking for it. It's just boom, you're late by. Generally, they give you a day's grace. So if you're due by the middle of the month for prior years or prior months payroll, you're getting smacked with a 10% late penalty, basically. And they had several of them, but there was a big one that was like $45,000. Altogether, it was around 60. And it was all you could see on the CRA statement. It was all right when the client said that the bookkeeper or the in-house bookkeeper was having a really tough time kind of mentally. And then, with sickness and absences and whatever, and they didn't realize that she was dropping the ball on this, but she dropped the ball on a bunch of stuff, GST, you name it. But the big payroll penalties were the big ones. And then another client, we have a brewing client, a microbrewery client out in Ontario, and obviously they got hit the hardest, in the retail and hospitality sector, being locked down for as long as they were in Ontario. And these guys had hundreds of thousands of late payroll penalties, but they were kind of, so there wasn't really this bookkeeping error issue with, bookkeeper dropping the ball. It was more of, they were kind of using the payroll remittance to somewhat finance the business and just make payroll, right? And so they applied for it themselves. I didn't help them with it, and they got denied. And I don't know exactly what the reasons for the denial were, but it was pretty generic, like "too bad, so sad" was kind of CRA's response. And I was like, oh, that's kind of brutal when you think back about you didn't miss a paycheck, and these people were struggling, right? And like really struggling, and they're treading water right now. So that's kind of 3 some years later after the initial lockdowns in Ontario. So it's a whole host of issues. But yeah, what CRA is going looking for now, I think I think it's game on, gloves are off, and we'll see what's going on. I've heard medical practices, for all things, doctors are going after that now, like not in a big way, but we're just hearing that in the marketplace. So it's we'll see what comes of this year and what they're after. But it looks like construction's on their radar. I think that's a political thing. I think to say we're doing this and this and this with respect to the housing crisis, right? That seems to be the focus of all the narrative that's out there right now.
Right. So, on these payroll penalties, what I'm hearing is it's automatically calculated and automatically applied. So would you suggest that given that you should be appealing if you ever get a payroll penalty?
Yeah, it depends on the materiality of it, size of your payroll, and whether there's fairness request guidelines where they will consider waiving the penalty. But like I said, so far, like this one microbrewery in Ontario had an excellent reason why they shouldn't have been sort of hit with the penalty, and they ended up getting their Liberal member of Parliament involved, so that might carry some weight. And we'll see what comes of that. But yeah, they're not being very. And I voiced this to CPA Alberta to take it up to CPA Canada to kind of go, hey, look, if something was happening that caused undue hardship during 2020, 2021 sort of thing, And so you were late with, whatever, GST remittance, payroll remittances, just to be a little bit more understanding, I guess, and not be so rigid. So you still have to meet the guidelines, but there may be something that falls outside the guidelines that you can still apply for. It's like, if you don't ask, you don't get, right?
Yeah, I think you raise a good point, and for the small medium business owners on the call, or the finance leaders that support them, it's not unusual for us to see clients. Obviously, once there are clients, they generally don't do this because it's not recommended in any form by Amplify, but we inherit clients who have been advised and or made the decision to use late GST payments, late payroll remittances as a bit of a financing opportunity. And you could look at it based on spreadsheets and numbers and say that today's penalty rates from CRA compared to the interest rates that are available for high risk clients, from a cash flow perspective, it might seem like a really great idea. But I would never recommend it. And I'm happy to hear, I'm sure you have a lot more stories than I could even imagine, David. It's doesn't matter what the cash flow says and what the interest rates are versus the penalty rates, because at the end of the day, if you are owing CRA money, and that can very quickly build up and become material in large balances, you are essentially untouchable by almost any lender and even professional services firm. Like, it really makes you unhelpable. And we all know it takes a village, and to grow a business, it's going to take a lot of help, a lot of lending, financing, investors, professional help, employees. When you owe CRA money, a lot of people consider you too high risk to help. And so it is generally never, ever recommended, and is certainly not to let it build up to two.
Yeah, and this is
There
something
can be
I've
a reason for one, but never two at a time, and then it starts to accumulate really, really fast. So
yeah, and I've been helping a couple clients that are in that situation with CRA collections and going to CRA on a no names basis and kind of working out a rough payment arrangement. And they're basically saying, 3 months, 6 months at the most, and you're paying 10% arrears interest today. So we said to this one client, I said, let's see if we can find you a mezzanine lender that will take it over a longer period of time at maybe 7.5%, 8%. You're still ahead of the game versus using CRA as your bank. And you're just cleaning up those old arrears from whatever it is in the last 2-3 years. Like, if you're in the hospitality business, especially in Ontario or Quebec, God help you. And they're struggling. It's like, all right, I think there's a market for mezzanine lenders to kind of help these people out. Say, look, we'll extend you over 3 years, and CRA is only going to give you 6 months, right? So,
yeah, awesome. Okay, thanks,
cool.
David.
All right, there was that thundercloud there for a reason, because sometimes it can be a little rocky and dealing with GST audit. So there's really two types, and you may or may not have been exposed to these in the past. Is you'll have what's called a field audit, which is kind of full scope. It's not looking at any one particular issue. It's covering at least a year, potentially up to 4 years, which is the statute barring period is 4 years, but they have been known to go back beyond that. Whereas a desk audit is usually short and quick, usually covering one period, either a month or a quarter. Sometimes they can extend it to 2 or 3 periods, but they're looking for particular issues. Normally, it's something that there's an anomaly in the filing pattern of, say, this quarter compared to the same quarter last year, or all of a sudden there's a big refund that came out of nowhere and you're not normally in a refund position. There can be all kinds of reasons that what they call their business intelligence group, which looks at screening files for further audit. Sometimes they don't make it to the desk auditors, and usually it's something can be resolved with a phone call. Those are rare nowadays. Is they tend to kind of go for a desk audit because they are usually quick. They're usually over in sort of 90 days, whereas a field audit can last several months and seldom less than a year. Almost always are kind of more than a year if they're covering 2 years. And they're going to look at all kinds of different issues, tax collected, not remitted, incorrect tax rate applied. So maybe somebody has based in Alberta, but they got customers in Ontario, and they're incorrectly charging GST only, and it should have been, say, 13% HST, or Atlantic Canada for that matter, where you got 15%. And field audits too, if they detect, and they're trained to detect, some, basic income tax issues, and vice versa. The income tax auditors are trained to deal or detect, I guess, GST issues, and you could end up with maybe a full scope income tax audit, or maybe a specific issue. You may see them start asking for personal financial records like bank statements, investment statements, credit cards, etc., of the shareholders. We've seen that, and they're kind of digging around to see what's there. And normally that's a function of, they, in a field audit, they'll probably have a whole lot more information on you than you can ever imagine, in terms of what you own for cars and toys and things like that, and personal property registries. And if that doesn't really make sense with the income you've reported personally as a shareholder, then they might start digging into the shareholder and their spouses side of the business holding. So, and like I said, desk audits, they're usually single issue, single period, and it's just abnormal filing patterns that they're looking at and wanting to find out more. It's pretty standard type of deliverables and information that they want back. So just in dealing with these people, whether they're desk audits or desk field auditors, if they're coming out to visit you, that's normally a field audit. They'll come to your place of business and may want to conduct that audit on site. They're human beings just doing a job. Some of them have personalities, and so just try to aim to be respectful and cooperative. I think it just makes it easier. The old school approach when I started in this business was kind of the old income tax practitioners, and sorry if I offend anybody on the call, but they were kind of like, the approach was, treat these people like animals, if you will, and kind of stick them in the basement with no heat, and don't let them have coffee, and give them maybe a table to work on with a dim light, sort of thing. I'm exaggerating, but the idea was that didn't really get off to a good start. So again, avoid those negative first impressions. I've seen clients that they get into these meetings with you, and or you're along for the ride, or the first or second interaction, and all they're doing is complaining about Trudeau, and it's like, these people don't care. They probably complain about them too. Just don't give them a reason to expand the audit, and one of the big things is really about timing. So making sure that delays are minimum. If you have to postpone something, let them know as soon as possible. In a field audit, or even a desk audit for that matter, appointing sort of somebody who's a single point of contact, that they will run out any questions through the business, whether it's finance function or marketing, or somebody in logistics, for instance, may have the answer to something. And so that they're that single point of contact with the auditor. And if they've got questions where they want to, we just had one of these. It was a not large nonprofit organization, and basically the idea was, have two finance people at the meeting with the auditor, one taking notes and one answering questions, just to make sure that what you say is, I guess the best way to put it is not misinterpreted by the auditor, for instance. But that single point person would then, direct questions to other people in the organization and get back to the auditor with things generally in writing. So as auditors typically have adjustment thresholds, they know how much they're supposed to make in tax per hour for the government. And so, if you try to change or thwart them in their audit, they may adjust those thresholds differently. So in a desk audit, again, it typically starts with a call. If they can't reach you, you'll get an audit letter, typically via CRA mail as well as snail mail. It basically has standard questions, and they want, they should be by protocol is to give you 30 days to provide everything that they requested. Normally, clients come to us about the third day before the 30 days is up, and asking if we can help them. And immediately, first thing we do is get a consent letter and request an extension, or have them request an extension. CRA will generally grant that, generally up to another 30 days. Sometimes they'll give you another 15 days, but they don't have to, but they've been pretty good about it the last 2 or 3 years for sure. There's a bunch of standard questions that they ask for, which we'll get into, but if there's a bunch of non-standard questions, it means they know something specific and they've got something that they think that they can assess on. So they may dig down into that issue for a particular industry. So if it's a builder, they might be saying, okay, well, we know you claimed input tax credits on building this new building we can see on your website or whatever. And, we can see that it's being leased up, but we don't see that you paid us the GST on the fair market value of the building. So they know what they've got an assessment at that point. So I guess just being fairly careful with your answers. And if they got, if you got your dead rights, it's like, all right, it is what it is. So this one, dealing with any auditors for that matter, I guess you could say that with financial statement auditors too. Just caution in providing too much information or documentation to them. Just answer their questions and provide exactly what's requested, and any relevant documentation. I've seen clients go off and said, CRA auditors ask for a sales invoice or purchase invoice, and they'll send them, the face of the invoice plus 20 pages of backup that's completely irrelevant. And there's information in there that an auditor might be looking at and going, oh, what's this about? And it just opens cans of worms and is unnecessary. So just give them exactly what they've asked for. So the typical first question is just saying, describe your business, the types of supplies you make, whether they're taxable, zero rated, or exempt, and just make sure, just keep it short, maybe 2 to 3 paragraphs at the very most, maybe 10 sentences. I've seen clients put much shorter things that basically it's like 2 words, which is a little too short, and a page and a half is too long. So just be succinct, I guess. The next 2 questions just say, give us all your sales and the GST collected if applicable by, for the period. They want details in various columns, invoice date, that kind of thing, the amount of the invoice, and a description of what it was, and then the GST amount. And they should have the customers' names on it as well. And obviously the amounts reported on the return should match what's in the general ledger of the sales and GST report that you give them. Then they want sort of the top 10 invoices by value, list them higher to lower, all for separate customers. And if you only have a few customers, or maybe just one customer, you can just tell the auditor that and just say, look, I've only got 1 customer or a couple of customers. I don't have 10. So they may say, okay, well, provide the contracts and any delivery shipping documents where there's goods involved, etc. Last 2 questions are just on the other side of the balance sheet, if you will, is just asking about all the input tax credits claimed in the period. Again, specific fields, invoice date, GST number of the supplier, if possible, supplier's name, and the amount of the expense in the GST. And again, that should match to what's on the return. And if not, usually that's a timing issue. Invoices get entered sort of after the returns filed. And then just like on the GST and sales side, is provide the top 10 invoices by value for different suppliers. They may ask to see customer contracts, other source documents, etc., such as expense reports, receipts, etc. So again, if there's additional questions that aren't those kind of top 5 that I just went through, that means they know an issue, or they're pretty sure that there's an issue that they can assess on. Again, just be careful of how you answer those questions. And like I said, desk auditors, they don't have as much access to the information, nor do they go digging as much as a field auditor, because they have more time on their files to do it. I think back in the day, it was probably about 100 hours for a field audit. And I think for desk audits, they're down to like maybe 20, 30 hours in total. So field auditors have a whole lot of access to information from provincial government registries. They could have information from other audits, leads, for instance, informant lines, etc. So when they're going to basically undertake a field audit, they're doing it because they know they've got an assessment and there's an issue there. There's very few field audits come out with no changes, whereas a desk audit, sometimes they're just fishing for information, and sometimes, well, quite often, in my experience, is that there's no change, or it's so immaterial they don't bother. So with desk auditors, again, they're just going to be looking at, payables. So they're going to be looking at, the entire ITC list that you give them. They might be looking for, personal expenses, taxable benefits for shareholders and employees and things like that. But their big thing that they like to pick on is just making sure that the invoice or source documentation that was there to substantiate the input tax credit claim is compliant. So there's regulations out there as to what information that you have to possess before you claim an input tax credit. Normally that should be all on the face of the invoice, but it doesn't have to be. It can be in a contract, it can be in other places, but that's one thing that's easy pickings for them. And certainly in the construction industry, we know, and this has been the case forever, invoices are not always the best, and typically they're in the wrong name of the wrong company or similar issues that they pick on, and they deny those input tax credits, which can be fixed. Invoices and source documentation can be fixed up. Suppliers can reissue invoices, and then you can claim them in the next reporting period. So it's just a top list of top issues. This is the same as desk audits and field audits. Is no particular order in terms of value per se, but this is just the issues that are assessed. Again, number 3 there, documentation issues. That's a good one for them, where they just deny the ITCs. A lot of people still claim 100% of GST, HST on meals and entertainment. GST on taxable benefits for employees and shareholders, another one. And the big one in sort of, I guess this could apply to a whole bunch of different industries, but some client may think that something's exempt from GST or that it's a zero rated supply, and it's not, or it doesn't meet the criteria. So GST or HST would be assessed on those. And this is another, I guess, top 8 list of issues assessed by dollar value. So again, this is no particular order in terms of dollar value, but this is typical. This is old information, but I think it's still pretty relevant today. So with that, Jamie, any questions that have popped up in the chat or anything else you've got for me?
Yes. I laughed about your basement and no heat auditors because I think I was put in some closets back in my audit days. So I had a moment. But question about these audits, like if you're going under a desk audit or a field audit, and they, as you mentioned, they ask for some specific things, would you recommend that somebody put together like a full package that will give them everything that they could possibly need, and it'd be easy to navigate, and it's organized, and it's very transparent and very generous with information? Or are you a believer that you should only give what's specifically and directly asked for? Because I've heard both sides of the camp in all audit situations. Obviously, when I was an auditor, it's different because it was a corporate audit and there wasn't penalties as a consequence. And I obviously leaned very heavily towards the first, like a nice prepared by client. We used to call it PBC. Maybe I'm showing my age. And it was a binder. It was literally a physical binder. Now I'm really showing my age. That was obviously the bias in a corporate audit. But again, the consequences and the service situation is totally different than this. So would you lean towards give it all, keep it organized, get it in their face right away, or just give them what they are specifically and directly asking for? Or is there a gray area?
So my history with desk audits spans probably 20 years doing these, in addition to field audits, but desk audits are more numerous. And we've always put together a package. I believe in kind of doing just like you did, not like a binder, but in a single Excel spreadsheet is all that stuff that I just went through. You can put that, and then you can create sort of a PDF, and just like you were going to give it to your, audit partner or audit manager for review, is you've kind of done their work for them. So as I said before, I think that the amount of time that they get for audits is constantly decreasing. So when they're rushed to get through a file and they've only got 20 hours to review and process and assess 1 month, consider they've probably got 5 hours just starting up the file, getting it going, and sending you the first letter, having the first call, and then giving you 30 days, and you send them a bunch of junk, and they look at that and go, oh my God, I'm not going to make my budget, right? And so over time, those files used to be 50 hours, which is way too generous. And so as that's decreased over time, they're forced to make maybe rash decisions in a lot of cases just to get their file done, get an assessment, or get out, right? If there's nothing there, move on. And so I've always been of the mindset is, give them a nice package, not too nice. Put it all in Excel, tie it in, and basically you've created their audit file or working papers for them. In this is a very standard one. And any other, kind of ad hoc questions that seem out of the norm, meaning they've kind of got you on an issue or whatever. I mean, you're probably not going to get them off the issue. And if they got you dead rights, like come forward with it and move on, right? So I'm more of the camp of not just give them an email or sorry, a fax full of all sorts of paperwork that they got to sift through. It's just like as if you're going to submit it to your audit manager, because they're going to come back with what a DFQ is, right?
Yeah. Yeah.
So
that's good.
The less of those you have to answer, the better, right?
We have a question. Is there an incentive, whether it be monetary or company promotions or meeting quotas, for the CRA officer in finding anomalies or errors or opportunities for penalties?
I don't know what their performance measurement metrics are, but when I used to work there, it was like, I think income tax and GST, they had X thousands of dollars per hour worked on average that they were supposed to collect for the coffers of the government, right? And I forget what the number was, but I'm going to say, I think 5,000 was kind of the average number across the board. Large case auditors obviously would be bigger because they're dealing with bigger dollar issues. But so they don't get any compensation directly for it, like a commission, if you will. But if you think about a balanced scorecard for HR performance management, that would be a factor, right? Like number of on-time files, on-budget files, and like assessments that are legit, I guess, that are not, just for the sake of issuing an assessment. Like I said, I haven't worked there for eons, so I don't know what the current is, but you can probably find out. But lots of people ask that question, but there's no particular specific, okay, you get 10% of the winnings kind of thing, right?
Yeah. Yeah. I mean, and we know they're government employees, so it's not going to be overly variable pay, that's for sure. Yeah. Or maybe performance based. No, that was right. Okay. Is there an appeal process after the assessment from the audit? And if so, what's it like? And is it worth attempting? And what are the common outcomes?
There is, and I've got an entire part 2 to this because I couldn't squeeze it all into here.
That one. That's great.
If everybody wants to hear, so that session I've created and presented before is all about CRA voluntary disclosures and notices of objection. So that's kind of another full hour if you want to hear some more on that. But yes, there's appeals. There's lots of different stops after that, and then tax court, right?
And I guess my last question would be, I mean, it's funny because you mentioned in your intro that you and I work together, and just for a little bit more clarity, I worked with David at the same time as PwC, where he had to assist my audit clients. And then I hired David when I was a finance leader in industry because we had very complicated indirect tax. So I've been both a client and I guess, peer of David's. And no matter where I go, there's not that many indirect tax people in our community. So I always seem to find David, which is great. Doesn't matter what role I'm in, I find him. So for, when this is obviously not people's, generally speaking, indirect tax is not people's day job. You're one of the few. Would you recommend, like, if you're at a point of an audit, I would, based on what I heard, the average desk audit, I don't think you need to be paying for extra help because it could be truly just a query and it could be simple and just an opportunity for clarity. But like, if they're coming and doing a field audit, would you recommend that an advisor and professional services be brought in? Like, would that generally have a return on investment for the average finance leader and business leader, or is it just dependent on the situation? Because I mean, from what I heard from you, a field audit's going to end up finding something. So are you best to mitigate that with an expert like yourself, or are you kind of, you're going to be paying the piper regardless, so why pay you too?
Well, let's start with the desk audit question. And I've seen, again, you're brought in at the 11th hour after somebody's done something, said something, or given information that led them down a rabbit hole. And I've seen bookkeepers try to handle these audits, and they basically send a bunch of junk to the auditor, right? There usually ends up being a bit of a personality conflict, etc. And like I said, putting that package together that's got a nice bow on it, but not too nice. Um, if you had that reviewed at a minimum by somebody objective that can say, somebody maybe with an audit background or that's used to dealing with these issues, and it's like, okay, just make sure you don't send them something that incriminates yourself, right? So having a look at it, I've done these, a lot of them over the years, and it's between me and my teams, they're generally no change audits because we fix a lot of the stuff that we can before it gets ever sent to the auditor and it blows up in your face, right? And or you go in and you have a look and say, well, they're probably going to find this issue, so be ready, right? And sometimes they miss it, right? And you move on and like, okay, correct that. If it's a material issue, it's like maybe you should have done a voluntary disclosure or brought it to the auditor's attention if you were able to recover the tax some other way. From a desk audit perspective, there's no need to kind of trot anybody out in front of the auditor. Whereas I think in field audits, there's people out there that like to bring in the heavy guns. And I would say always keep us in the background until you don't. And then, if something goes off the rails, then you can, bring somebody out. And whatever, hold your hand, whatever. Sometimes this is a matter of mitigating a personality conflict. And that's more often than what it is that somebody got off on the wrong foot, whether it was the auditor or whether it was the client or whatever, and it just becomes an untenable relationship. And sometimes it's just nice to have a new face and maybe just you're able to speak the auditor's language or what have you, like the client or the point person at the client's not getting the message across or is grasping at straws, or what the circumstances all depend, Jamie. And sometimes it's like you can manage it all the way through the end yourself. If it's a straightforward business and there's nothing to hide, but I'd always have somebody have a second look at it, right? Before you just, get too far down and, paint yourself into a corner, as I call it.
Yeah, no, those are good. Okay, thanks, David.
Yeah, great. Let's move on here. So again, managing field audits and auditors, really no different. Cooperative, respectful approach, negative first impressions, and don't get into that trap, as I talked about, which is having an adversarial relationship and giving them reasons to expand the audit, or maybe thinking that you got something to hide, that you're trying to thwart them from, doing their job, right? And again, having a point person on a field audit is even more important, just because there's going to be more questions get shot off to different departments, and it should run through that person and maybe vet the responses, and that they're sensible responses, they make sense, and shouldn't open up any other questions. In other words, you've answered all their questions and not just a question or a partial response. And again, desk auditors versus field auditors, again, have different thresholds. I would say field auditors have more discretion and more ways to expand their audit. They can go back to their team leader and say, hey, I think there's this issue. Can I get another 10 or 15 hours to explore that? So yeah, they can more easily expand the scope of their audit, issues and periods as well. And so field audits are just that, is, they want to come to your place of business. But with CRA's audit inventory, you may get an auditor anywhere in the country. But if it's a field audit, it's going to be somebody local, or perhaps we've seen auditors come down from Edmonton, sometimes Red Deer offices, and vice versa. So, having them come to your place of business, if it makes sense, invite them to, well, I wouldn't say invite them to do the audit at your place of business to see if they want to. Obviously, that was a non-starter for the last few years. But that's changing, and I think they're happy to come out and explore. Certainly if you got a manufacturing operation, or there's stuff that they need to see that's on the balance sheet, or it's going to be tied back to financials. It's like, okay, well, I want to see that new machine you bought from the US and imported it into Canada, and that it's in basically working in service, if you will. And just with audit queries, they're right there. Again, increases the speed, get it over with faster. Hopefully with, you're going to get more thorough query responses. And like I said before, wrap it up with a nice bow, but not too nice of a bow. And all those responses, both directions, should be in writing wherever possible. And that, you're providing a fulsome response. So you're probably going to have to provide in a field audit, they're likely going to ask you for a full general ledger export, perhaps into Excel or other format, depending on the ERP you use. That basically gets sent to what's called electronic commerce audit specialist or ECAS auditor. And they basically get that, massage that data into a format and so forth that the auditors can quickly use in their audit programs for searching on, key terms, breaking down, place of supply rules for customers in other provinces. And they'll do that, for the purchases and the sales data and the related taxes thereon. So generally, they'll select the last full year that's filed of GST returns that matches to the most recent income tax year filed. And if they're finding issues in that most recent year, they're probably going to go 1 year back. And if that issue is still there 1 year back and it's significant enough, it could go back further, like potentially up to 4 years, perhaps longer. And then they'll probably, if they believe the issue is still pervasive going on today, then they'll bring that right up to date for the most recent return filed. And again, if that's happening, get somebody involved early. But like I said, they don't necessarily need to be front and center and talking to the auditor, because that sort of looks like you got something to hide and you're, trotting out the big guns, or, lawyers or accountants or whatever. Try and keep, them in the background to the extent possible. So it doesn't feel like it's going to start to get controversial or, adversarial too early on. Again, putting everything in writing, queries should go back and forth via tax or CRA's My Business account. Submit documents portal is generally where they'll put all the queries and where you can put your responses in there, from PDFs to Word documents to Excel working papers, etc. And if you think it's going to be a big scoped audit, is you can ask them. They may not have the audit plan fully drawn up, but they might have it in their head. Is just ask to talk about the audit plan as in helping channel information on what you can expect and where they're going to go with this, and that'll tell you if they kind of got an idea of that they may have an assessment in their mind already. And that'll give you a sense for A, how long this is going to go on for, and B, what you might be up against in terms of a possible assessment. Again, you could have a second set of eyes look at that and say, okay, I think they're going to go after this issue, or they will likely find this issue and assess on it. So you'll kind of know financially what you might be up against, and if and how you might be able to get that tax back, such as re-invoicing it to another B2B client, for instance. Just like with desk audits or any matter for that. These deadlines is, don't miss them. If you're going to miss them, don't tell them at the 11th hour, check in with them, 2 or 3 days beforehand, at least at the latest. Find out, when you've got holidays, they've got holidays, because these, or any other key person that might be, might have to be part of the audit is looking to see if everybody's going to be around, because these things last. Again, they're not like 90 to 120 day desk audits. They're going to be much, much longer than that. So having a sense for who's going to be where, away and when is very helpful on both sides. What we've seen in situations where, and I have to deal with this afternoon, is a client ignored, they changed their mailing address. They weren't checking their CRA online mail very regularly, and CRA audited them and basically said, look, we can't get a hold of you by phone. So we're reaching out in writing. So here's our first letter. Please provide, this information. And then the next letter says, you've ignored us. We're going to propose to add HST at 15% to all your sales, even though they might have been only subject to 5%. And all the GST refunds that you claim, we're going to deny them. Well, the client still wasn't getting the mail. They sent a second proposal letter saying, hey, we haven't heard from you in 30 days. This is what we're going to do. We're going to propose to assess this again, and we're going to put gross negligence penalties of 25% on it. So the client never got these, never heard, or CRA never heard from them. And then they get an assessment, and then again, still didn't know they had the assessment. And then in their CRA mail, they had notifications from CRA collections saying, hey, you owe us $200,000 in GST as a result of this audit, desk audit. And we're going to, start taking legal action. So eventually they started garnishing their bank account, which was kind of the first step in dealing with collecting the debt. So all of a sudden you find out your bank account's empty, and it's not because you spent money, it's because CRA has been trying to contact you and you haven't paid anything. And so, if you're not being cooperative or paying attention, your mail and getting back with them, that you can get that kind of a heavy-handed response. So just be very careful with that stuff. As I said, they tend to refer audits back and forth. So field auditors, when I was there, I was trained as both an income tax and GST auditor. GST primarily, but had enough income tax background to spot issues and refer them back and forth. A lot of times there would be things like taxable benefit issues on employee allowances, kilometer allowances being excessive, for instance, motor vehicles or passenger vehicles inside the company being made available to employees, typically to shareholders, etc., for personal use, things like that. And so those are typical issues that fall out of a GST audit, a combined audit. And again, as I talked about before, they have a much more access to information, and they're typically making sure it's like, okay, well, what real estate do you own in Alberta? If they think you've got real estate in maybe BC, personal property or rental property or short-term rental property, they're going to know that, as well as vehicles, etc. And they're just going to assess what you've reported for income tax and say, is this commensurate with your standard of living and all the stuff that you own, right? And again, they may drag in spouses, maybe children. If they're getting paid some minimum amount to work in the business or something, they might look at that. But they're going to probably look at personal bank accounts and credit cards, etc., of spouses of the shareholders or shareholders primarily. So just be prepared that may happen. If they start digging down that rabbit hole, that means that they're got a lot of time on their hands for their audit, and they've probably got what they think is a pretty big assessment. So you don't want to be in that unenviable spot. So just going back to Jamie's comment about the audit stage is that there is life after audit, but it's kind of your last stand before you have to file a notice of objection, and then eventually to tax court if CRA appeals doesn't agree with your objection to the assessment. And the other reason you want to do that is appeals are basically about a year to a year and a half behind for even the most basic objections. So because GST is a trust fund that they want you to pay that ASAP after the audit assessment's issued, you don't have a choice not to pay it just because you're going to file an objection. So you could be waiting a year and a half to hear back. And again, with those interest rates of what they are at 10%, and having to cough up that money is resolving as many issues at the audit stage is more important now than ever. So it's that cooperative approach is without kind of completely kowtowing to them is important. So get it addressed with the auditor, and especially involve their team leader if necessary. Sometimes you'll get a green auditor who's being sort of led around by the nose by their team leader, telling them what to do, and you'll be able to sort of tell, or that they don't necessarily know what they're doing. So having a discussion with their team leader early on is probably a really good idea if you've got somebody super green that's really just kind of floundering around. As I said, notice of objection and even voluntary disclosure is so far behind. It's just going to take you, again, a minimum a year for it to even be assigned to an officer, and probably a year and a half to 2 years to have it kind of wrapped up. Jamie, back to you. Anything that's come up in the chat or something that's come to mind?
Yeah, I mean, it's funny because it doesn't seem to matter how technical or what topic we have with All Health Amplify. At the core of every single presenter's discussion is people. And you mentioned that pretty much every slide about the personalities and how that drives a lot of the pain and or consequence of these audits. And And who would have known that our indirect tax aha would still end up being a people conversation? Given the nature of government and hierarchy and everything, would you recommend, you just mentioned that junior person who's going to be your main contact and doing all the work, like, is there an opportunity where you'd have your point of contact dealing with the junior person, and then somewhere along the lines, like, use hierarchy to your advantage, where someone higher in your organization is the contact for the team lead, so that you're not overstepping that junior person or getting in hot water that way? Is that part of the strategy, or is it just one point contact, no matter whether it's the team lead, the junior, what have you?
Well, and I've seen situations like this where the tax director, and these are used big public companies, that they tend to, they're kind of kept in the loop all along by that single point of contact, and they know how things have been progressing or not, with the auditor, and or maybe have met with the team leader before, but they're not too hands-on. Is, again, keeping that single point of contact is fine, and keeping that single point of contact with the auditor and their team leader is okay. It's, jumping in at the end or the 11th hour, that tax director person, or that somebody higher up in the organization, their discussions, if it's been adversarial from, maybe the beginning or near the beginning, that person's probably not going to be necessarily helpful at that stage, in talking with the team leader, and it may have to go to the team leader's manager. So there's, again, you want to talk about hierarchy, those managers are a little bit closer to Ottawa, if you will, and they have to answer for more customer complaints, we'll call it. And so they're a little bit more open to being reasonable, whereas some team leaders are not, and they've got their little thresholds that, on their balance scorecard, that they've got more boxes to tick than the auditor, right? And so, and it tends to be more on the financial side, than the auditor. So you can get team leaders that are very aggressive that way, and they just want their people to put through assessments for sometimes really ridiculous reasons. That's old stuff. I haven't seen that lately. But in terms of hierarchy, and sometimes you have to maybe even get a tax lawyer or some other tax controversy professional involved if it's really off the rails. I've had to rescue lots of tax directors with egos, that have been very belligerent. Again, that old school approach that I talked about, where you're rescuing several relationships. They're been adversarial with the auditor, and in some cases they were probably justified in it, but the way they went about it wasn't helpful. And so you're rescuing several relationships, and sometimes you just got to step in and make a call to the manager of that whole group, and kind of come at it from that perspective and say, hey, can we restart this discussion? We're going to take this person out of the equation. It's really like, I don't know, it's almost like resolving a family squabble between siblings, right? So
yeah, well, what I'm hearing is the person that has the best access to the information and is involved in actual GST filing, etc., is not necessarily the right point person. You might need that project manager personality who can navigate this, if that's not a strength of the bookkeeper or tax director, or depending on the size of your business, right? So looking at the whole picture in terms of who you assign as that point person is really something I think we're all going to take away from this conversation.
very important. Yeah.
Yeah, and not necessarily what would seem like the logical and obvious person, because we all know a good project manager doesn't have to know what they're doing. They can still get things done.
And if you're a small enough organization, that person may not be in your organization, right?
Right. That's true. You might have limited options as to who you're going to assign, for sure. Okay,
Yeah.
thanks. We'll let you keep going.
Yeah, you bet. So yeah, just moving on to PST audits and auditors. A lot of the same principles apply as, as managing auditors and audit processes. PST audits are typically much longer. The reason is they have way less staff. They got to cover, quite a few taxpayers or registrants, over, several provinces. So not only do they have their own provinces, tax collectors and businesses to worry about, They've got to deal with other province ones, such as, you know, Saskatchewan and BC dealing with Alberta clients, for instance, right? So their audits generally run up to 4 years. Manitoba's 6. And generally, if there's a refund available for overpaid PST, it generally matches the audit period. And so your audit periods are up to 4 years, not necessarily always 4 years, but they're looking at, you know, more data, more transactions, et cetera. And so the dollars can get bigger because they're the tax rates are typically higher. So BC, you got a 7% PST rate, whereas, you know, the GST is only 5%. And you're looking at, you know, 4 years versus maybe 2 years in a GST audit. Typically, they don't have much of a travel budget, except for BC, for instance. So they tend to do these remotely. So we'll see Saskatchewan auditors will most likely, even though it's easier for them to travel here, they'll do a lot of it remotely, generally through emails. So whereas BC Finance, they now require you to, well, basically make a written agreement that says you will pay the auditors or auditor or multiple auditors travel costs. We see that quite a bit with big companies in Alberta, whether it's an energy company or oilfield services, for instance, that have operations in BC. They get audited pretty frequently. And so now they got to pay for the auditor's travel costs. So another reason to make an efficient audit and make it go quickly, right? Manitoba and Saskatchewan don't currently charge businesses that are under audit for their travel costs of their staff. So because auditors in PST environments are dealing with, again, a lot more number of years, they're using a whole lot more data. So they tend to use sampling and extrapolation techniques that they think that they can find an error rate that works for them. They may get a larger assessment. So watching what they use for a sample period or sample type of transactions, and then assessing on that across the broad population of 4 years can get them a big number. So that's a pretty important thing to watch with auditors they use extrapolation. So because again, these provincial governments are sort of strapped for cash and people, they don't have a lot of resources. So these auditors are typically trained in other tax programs. And typically BC, for instance, you'll see auditors that would do a PST audit, but they'll also do, you know, fuel and carbon taxes as well. Manitoba and BC both have, you know, health levies, so they might be auditing health levies on employees' payroll for, you know, either permanent establishments or places of operations in those provinces. So you might just not have a PST audit, you might have a multi-tax program audit. And I guess what I'll call the business intelligence of the PST provinces is quite interesting. And a lot of clients go, well, how did I get caught by Saskatchewan? And Saskatchewan's really quite sneaky. They have, you know, special projects such as searching for Saskatchewan real property contractors that are from, say, Alberta. And they will basically go to work sites that they know of. Let's say it's a new well site, and they'll just look at license plates and take pictures of them. And then they'll go back to motor vehicles and say, okay, whose company does this truck belong to? And then, you know, that's the way they find out. They also have informant lines like everybody else. There might be an audit of a related company or a completely unrelated company. They pull information from and find it that way. Filing a refund claim will almost certainly get you an audit, especially if it's significant. Other special projects that they might have that are specific to a particular industry and or province, right? So Alberta oilfield services companies, real property contractors, those are pretty common. So if you file a refund claim, it should be netted against the tax assessment that they will do under an audit. And if they do an audit and come up with an assessment, you want to look for refund claims because you can offset them, and that'll reduce any penalty and interest. So you may want to have a refund review done at or before the time of the audit. Talked about extrapolation issues before, and again, you know, going through error sampling and creating an error rate versus say substantive testing, which is typically what CRA does, is actual looks at transactions. versus error rate sampling and then extrapolation. Again, it makes the audit go faster, but it can produce inconsistent results that can go one way or the other. Some clients get an extrapolation result that they absolutely love, and they just say, okay, great, move on, assess me, and I'll go from there. And then other times it's, the auditor's chosen maybe an error rate or a sample that gets them a better result. So it can be detrimental. And that's where you need to sort of dig in and say, does this sampling period or sampling of issues make sense? Or again, was there seasonality or other factors that would skew it to get, either a false to you, but very detrimental to you error rate. BC and Manitoba tend to do that more often than, say, Saskatchewan. And if you think that they're being sneaky about their extrapolations, that it benefits the province too much, arguably speak to a manager and start thinking about how you might kind of tear down their arguments about the sample that they use. Again, top 8 issues. Again, no priority of order. Obviously, tax not collected. Maybe you weren't registered. Maybe you didn't remit the tax. If the client in say in a PST province acquired out of province goods, taxable services, digital services could be acquired from a non-resident of Canada. That's a pretty common one that they look for. If you take goods and or equipment, tools, etc., into a PST province, you're importing it. So if you'd paid tax, so if you acquired it from say a BC supplier, you would have paid tax. So the government wants that amount on what you bring into the province, whether it's permanently or temporarily for use or consumption in the province. Real property contracts, big dollars typically involved. There's sort of almost 3 different ways that PST is handled in BC versus Saskatchewan versus Manitoba. And very often it's done wrong. So that's a kind of a hot topic for them. In more so BC, there's a lot of exemptions for natural resource and extractive industries, manufacturing, etc. So generally, to take advantage of those exemptions, a customer must issue an exemption certificate or provide the supplier, typically an out-of-province supplier, say Alberta, with their PST number or saying that whatever they're acquiring is exempt. If you didn't collect that or exemption certificate in good faith, or you didn't collect it at all and didn't charge them the tax, they may assess you as the supplier. And then the standard fare of misapplication or misinterpretation of legislation, because it's sometimes, certainly with Saskatchewan and Manitoba, doesn't necessarily accord with what's in their bulletins, and vice versa. Whereas BC is a little bit more rigid, and their bulletins are pretty much bang on with their legislation. So Manitoba and Saskatchewan have what's called a real property contractor clearance certificate process. So that's a big issue. If you, as the principal of a contract, pay an out-of-province contractor, we see this a lot in Saskatchewan, for a real property contract, if you pay out without holding back 6% in Saskatchewan of the value of the contract, Saskatchewan can make you, as the principal, liable for any subcontractors, say PST obligations in Saskatchewan. So that can be a real problem. Some of the large energy companies that have operations in Saskatchewan have entire departments dedicated to just that process, and dealing with contractors, whether it's oil field services or construction. And then the other hot topic is obviously non-residents, aka Albertans, selling taxable things into a PST province, whether that's taxable services, digital services, software as a service, taxable leases or sales or rentals of goods, equipment, etc. So every province is different in terms of what they look for. So BC, there's known offenders that are Alberta oilfield services companies taking goods, materials, people, equipment, etc., into the province and not paying tax on those. So they know who they are, generally speaking, and they don't hesitate to pay a visit to Alberta. So again, it's bordering provinces. that aren't familiar with the issues, i.e. Alberta are being bordered by BC and Saskatchewan. So last few years, all provinces, including the feds, Quebec, are focusing on non-residents that sell into Canada. And so the PST provinces are no different, and they've basically really expanded their definitions of who must register and who's a remote seller that's required to register, collect, and remit the tax. So that's, catching Alberta companies by surprise, Ontario companies, et cetera. But they've really expanded the tax base over the last, say, 10 years and last 3 or 4 years with kind of remote sellers, whether they're in Canada or outside Canada. So PST auditors are also kind of collectors as well, versus CRA has sort of had that broken down into separate departments, if you will. And they'll basically say, okay, I've assessed you this and you got to pay this right away. And they can generally do payment arrangements with you, or they may refer you to a senior manager. BC, for instance, will take irrevocable line of credit in lieu of payment of the tax, especially if you're going to appeal it. And so always sort of ask what your options are. And in just like GST, PST is a trust fund where you're collecting tax on behalf of the province. And so watch, because there's director's liability provisions as well on those trust funds. So they like to collect those as quickly as they can, and directors should be aware of that. PST penalties and interest are always way more punitive than with GST under CRA's watch. Again, borrowing from another credit facility or mezzanine financing is generally more cost effective if it's a big number. So, and with that, Jamie, anything further? Any questions out there?
No, we don't have any questions, so I'll just let you wrap up and then save the last questions for the end, just because I know we're running out of time.
Yep. Yeah, I've got another section on collections here, and it's just a couple of slides. So, sorry, on audit professional fees. So, what this insurance coverage is, we don't sell the insurance, or we're not the insurer per se. Is it waives most professional fees up to a maximum, depending on the policy premium that you pay, to have the accounting firm or CPA firm that's filed the returns that are under audit. And investigations, reviews, short, quick, and dirty questions, or even something longer. And it could be CRA or any provincial tax authority. So the firm itself must be enrolled with this company called Audit Shield. And so they then offer a fee waiver service. And we effectively, we will bill them up to the maximum of what your, I guess, premium is, or premium policy is. And then so you don't get an invoice for professional fees. And if we have to subcontract another professional, whether it's an appraiser or perhaps a law firm or whatever, that's generally covered as well. And then there's no deductible beyond the annual fee for the fee waiver service. So this could be a thing that helps a lot of our clients sleep better at night, because one client didn't take it and or didn't avail themselves of it, and they basically had 3 different types of audits by CRA on GST, income tax, and taxable benefits / payroll audit in the course of about 1.5 years. And so I think they're gonna take us up on that now. Again, it's very proactive. It's cost effective. The premiums aren't that expensive. And like I said, if you've had 3 audits happen to you in 1.5 years, that's, if you're engaging professionals, that's probably going to run you a minimum 10 to 15,000 just to handle those basic inquiries and work with the auditors. So depending on the risk profile of the business and the industry, I've seen policies that waive up to 50,000 in professional fees. I think we had a multi-year GST audit with an auditor that just wouldn't go away, trying to dig through 4 years and get an assessment. And we ran it up, not on purpose, but it gets up to 50,000 when you're basically at a big national firm. So it covers audits of previously filed returns that might have been filed by somebody else, but as long as the CPA firm you're with are filing current returns, those should be covered. And it must be initiated by a tax authority within the period of coverage. So that wraps it up. If we don't have any other questions, Jamie, that takes us to just about 1.5 hours.
Yeah, we're really close to running out of time. So if anyone has any last questions, please do let us know. I do have a couple. So on that insurance, I mean, it's funny because I pulled up an old chat that our CFOs had, because obviously all of our clients are asked if they want audit insurance from their tax advisors. And the conversation that our team had within Amplify was quite diverse in terms of opinions. I think that probably the by and large end result was, given that our clients have competent accounting and finance teams, because we're those teams, that reduces the value of insurance greatly. And then the next question would be, how complex is the tax filings and situation of the client? Because if given, they obviously don't have an in-house tax expert, the clients that we're working with. So if it's complex, that insurance could have value. Well, I mean, obviously you might have a bit of a bias. I'm not sure, you mentioned that it's not really you selling it, so maybe you don't have a bias, but who are the right candidates to get insurance, and where would it just be a waste of resources to be paying for that?
I would say your experience with audits in the past, if you're constantly getting audited, no matter what industry you're in, if you just can't get it right and they keep finding assessments and they keep coming back and you've never had audit insurance, if it was my luck, I'd probably get it and then they wouldn't come back. But at the end of the day, if you're in somebody's gun sights, and we've seen clients and they were builders, and they'd start up a new limited partnership every time they had a new project. They'd file a refund claim, and basically, for every limited partnership they started up, they'd have a GST audit on the first claim, and there was always errors. And then so CRA would audit like the next couple of periods till they saw that the client got it right, or mostly right, and then they kind of left them alone, right? It's really industry specific. So I would say, if you're in the medical profession and most of your revenue is exempt, but you've got some GST, maybe a dentist or whatever, your odds are really low of winning the audit lottery. And I'd say it's probably clients up to maybe 20 million in sales that maybe it's worthwhile. But this one I talked to you about, or mentioned there before, that was up to 50,000 in fees. That was a really big private company that was probably 120 million in sales. And they got it as part of this is a prior firm, but so there's the risk profile is the real big thing, right? Size of sales, and maybe different provinces you're selling into. There's a whole bunch of factors that I think would weigh into it, so there's no kind of right thing, but I think industry risk would probably be the starting point. That's whether, like at the start of the slides there, it's like, all right, CRA said we're taking a really close look at the construction industry. So if you're in that business, even as maybe a smaller sub trade or supplier, certainly as a builder or a prime contractor, you're probably going to be the first one to get the visit, versus small trades and stuff like that. They're probably not going to bother you too much, unless you're registered for GST, collected the tax and never remitted it. There's a fair bit of that goes on, or if you're underground economy stuff. But yeah, so that insurance, I guess, covers provincial sales tax audits. So if you're big into BC or Saskatchewan or both, maybe Manitoba, certainly if you're in oil field services or construction and you're known to be taking equipment, materials, people, tools, vehicles, etc., into the province, and big real property contract values, that's another risk area where I would say, yeah, that would be a smart thing. But it's on a case by case basis. But and then there's the other thing: if you can't afford it and you run it yourself, we're happy to coach you in the background, and that's like a tenth of the cost kind of thing, right? And it's just like, do this, don't do that, say this, don't say that, and happy to review whatever you're going to submit and kind of say, oh, don't send them that. Make sure that invoice is fixed or you have that information and send it to them, right? So just making sure you don't step in something is what I call it.
Yeah, no, for sure. So maybe slightly off topic, but in the spirit of preventing yourself from getting into audits, maybe, in my past, the few times that indirect tax has popped up and given me sleepless nights, it was really related to like inheriting bad org structures and not thinking through how indirect tax would be impacted based on the corporations and the LPs and all those things that you're setting up. And I think a lot of times when we set those things up, we're thinking about, you know, the tax from an income tax planning perspective. We might be thinking about liabilities, and certainly we're thinking about ownership structure. And we often don't even have on our checklist to consider what indirect tax considerations that we want to think about. And so, you know, again, off topic, I appreciate that you're not necessarily prepared for this one, but when you're doing an org structure or restructure, what are some of the indirect tax considerations that you think should be thought through? And when would you be at a point where getting your advice during planning would make some sense?
So if you're reorganizing and you're transferring assets and shares, or
Like when you're thinking about new LPs, new corporations, and whether it's reorg or setting up from scratch a new business, like what are the things to think about from an indirect tax perspective?
the first thing is, if you're going to be transferring assets versus shares around, is making sure the recipient company is registered for GST prior to moving those assets. That's the biggest one that I see clients get into a situation where it's just not recoverable and the supplying entity has to charge it, but the receiving entity wasn't registered at the time, so they can't claim it back. And that's a painful one because the numbers can be big if you're moving big assets around, particularly real property.
Burnt with too. Like I inherited the org structure and then we got burnt with that big time.
Yeah, so if the org structure is not going to necessarily affect indirect tax per se, if it's not ideal, if there's intercompany transactions, they should be subject to tax unless an election's available to not apply the tax. And that election is called the no consideration election. I still see clients behaving as though it's in place, but it's not in place. And you have to, after 2015, I think you had to have actually filed that election with CRA and got basically a notification that they received it. And that notification may not even say that it's valid, and that would be determined by an auditor if it's valid. So that's a big one, because whether it's management fees or pushing assets into a new limited partnership that isn't registered, the dollar amounts can be big. So that if you want to talk about a rule of thumb, is make sure anything new in the entity in the group is properly registered for GST, or in some cases PST as well.
So that exemption, because I've definitely seen that happen too. You said that they have to acknowledge that they received your application for that exemption, but they may or may not make a decision when they acknowledge it. So for clarity, if they acknowledge it and then you don't charge taxes because you put that application in, and then it turns out for whatever reason they reject your application, would you be charged interest or just charged what you otherwise would owe?
Yeah, so normally what they would, so if the recipient would have been entitled to an input tax credit had you charged the GST correctly in the first place, they should apply what's called a wash transaction penalty interest charge. It's a flat 4%. So it's not at the 10% arrears rates of interest. And generally there should be no penalty applied if you didn't late file a return. And that's GST, HST, that's not a PST concept, but yeah, you would be, if you were caught and assessed and the auditor determined that, yeah, you filed it, but you were ineligible to use it, because when they receive these things, they don't give them a close look, right? So there's other elections that they do give a close look to, such as a sale of a business election. They tend to look at those if the dollars are big enough. But
and so, you know, in summary, obviously, if you're doing intercompanies, you're going to want to charge the tax accordingly and or put in this application for the exemption, but then recognize that acknowledgement of your application is not necessarily suggesting that it applies to you, but but you're covering your risk and the chance of a penalty and a higher interest rate by at least putting the application in. So I think that's important because almost all of us are dealing with intercompany and potentially could be not charging the indirect tax, and or we're already not charging, but we don't have this on file. So could be some gaps either way that that everyone could action. We are at the 1:30 mark. I think we've taken quite a few action points from your conversation, David. We will share David's slides and this video to everybody, all members and especially those here attending with us. And Nikki will also send out the CPD certificate. So you're welcome to follow up if you have additional questions or concerns. And as we've discussed at the beginning, if for those of you that maybe rolled in late, take a look at the chat. We've got lots of exciting AHA with Amplify opportunities. February is systems and automation. March is an ethics CPD opportunity, and it's ethics and governance. And April is talent and recruiting, along with a live opportunity in April, which we haven't opened the registration, but stay tuned for that. And finally, just a reminder that our New Year's campaign for Amplify Tech includes a contest for a free implementation, which is obviously of significant value. So make sure you get your application in by contacting Josh, and stay tuned because that campaign is actively being worked on. And I just want to let you guys know, I'll probably get in trouble from Jesse for breaking the news too early. Thank you so much, David, for all your time and attention and the great information. It was actually quite interesting and exciting, despite the fact that tax was in the title.
Thanks for having me. Thanks everybody who joined today. Hope everybody got a lot of takeaways.
Awesome. Have a great day. Thanks, everyone.
Thanks, you too. Bye-bye.